Hello and welcome to my channel. If you're a returning subscriber, welcome back. So in the last video, we talked about how to properly identify market structure, how to identify market trend, and what you should be doing when the price is rallying up and when the price is pushing down. So just because you are expected to be buying when the market is longing and you are expected to sell when the market is shorting, it doesn't mean you just buy anywhere or sell anywhere. There are actually institutional reference points that you should be paying attention to whenever you want to buy. And those are the points where you should be taking your buys from or taking your sells from. Okay. So this market thrives on the simple demand and supply principle that you already know. All right. You want to be buying at the price, or you want to be buying at a point where the price is cheapest. All right. You also want to be selling at a price where you get the best value for your money. All right. That's how you actually make profit from this. You just don't want to be buying anywhere or in the middle of nowhere. You should be buying at a point where you have control, right? Now, also in the last video, we talked about you buying at a zone where the market movers are also buying. All right, you don't want to be found buying where they are selling or selling when they are buying. Now, take for instance, you want to get a basket of oranges, all right, and in town A, the you know that the what you are going to get the bag of orange or the basket of orange is maybe $10, right? You know that if the same supplier moves from city A to city B, that same basket of oranges you would have gotten for $10 now becomes $20. All right. And then you also know that if that same boss or that same supplier who is taking bags of those baskets of oranges, once that same supplier moves to town C or city C, the price of the same basket of oranges becomes $30. Which one of these cities or which one of these towns would you want to be buying your basket of oranges from? All right. Let us assume that your transportation or how you're going to get to these cities cost exactly the same. You're not going to incur any extra cost if you want to move from town A to town B, but you just know that these three towns are within your reach, but in these three towns you are going to be getting the same basket of oranges at different prices. Which one of these towns or cities would you love to pick your oranges or your basket of oranges from? I'm guessing what is in your mind is city A or town A. Reason is that is the place where you get the best value for your money. All right, assuming you are a buyer. Okay, don't worry, we are going to apply this same knowledge to what we're going to be doing in the chat. But for now, just understand the concept. Same thing. Let us assume that you are also a supplier, that you supply oranges. All right, or you have a skill. You have, for instance, you have an online skill, right? Let's say you have some knowledge in sales and marketing, and these are the kind of jobs that you can do remotely, all right, from wherever you are in the world. Now you know that the same set of skills that you have, if you make it available for people in a very developed and industrialized economy as the US, all things being equal, what you're going to be getting in an economy as the United States of America may not be exactly the same as what you get in maybe a second world country like Georgia, or what you even get in a third world country from Africa or Asia. All right. You know that, yes, all things being equal, you are most likely to get more value for the same set of skills when you offer it to a customer or a client in the US or in the UK or any other first world country, right? It is just the same thing. You would want to offer your skills, put your best foot forward for clients that are coming from a place where you have more value for the skills that you are putting out. I hope this makes sense, because that is the basis for what we're going to be doing today. If you want to purchase something, you want to get it at a place where you know the same, you'll be getting the same value, but you'll be getting the same value, the same exact orange, but then you'll be getting it at a cheaper price. I believe you would want to go for the town where it is most cheapest, right? Same thing if you are supplying a product or a skill, you want to be offering it to where you know that you're going to get more value for the same set of skills. Okay, so that is exactly what you want to be doing. If you apply that to the chart, you want to be buying at a position where you are getting it at the um least expensive position. Okay, so now there are so many ways to actually mark these demand and supply zones. Some people use trend lines to mark their zones. Some people use support and resistance. Some people use demand and supply. All right. So for the purpose of this particular video, we are going to be focusing on how to draw um, supply and demand zones, right, using order blocks. Now, there are so many institutional reference points that you can actually buy from or sell from. Order block is not the only one. There are others. There are mitigation blocks, breaker blocks, liquidity void, fair value gaps, and so on. I think about 8 of them. But for the purpose of this video, we're just going to be focusing on how to mark out demand and supply zones using order blocks. I hope that is pretty clear before we continue. Okay, so let's start with the demand side. Okay, I want to mark demand zones on my charts, right? I want to be marking demand zones on my chart. Now, an order block, when I'm trying to mark an order block in a demand zone, I am just basically looking out for the last sell candle before the buy candle that broke structure. All right, by structure I mean, is the market trending upwards or downwards? So if the market is trending upwards, I want to see it break structure. All right, I want to see it break the highest swings, the previous swings. Okay, so let us quickly do that. Let me make my okay. All right, so I am on GBP USD. So now, men looking at this, you can see that price is breaking structure at different points of this chart. Price is breaking structure. So I'm just going to be bringing out my trend line. So you can see that price broke structure here. I'm saying from here, down here to, so let's just use from down here to up here. Let me make that a bit bolder. Okay. All right. So here that price broke structure. What I want to be looking out for, like I said earlier, if I'm trying to mark out a demand zone, right, in an uptrend, I want to be looking out for break of structures, right? I want to be looking out for the times where markets impulsively broke a particular swing. Okay, so this is a break of structure. This right here is a break of structure. Okay, this right here is another break of structure. All right, this right here is another break. I'm looking out for the obvious ones now. Obvious break of structures. These are the places where I'm looking out for. Now, I want us to focus on something. I want us to look at something. Now, if you look right here, when price broke this structure right here, right, it left an order block. An order block in an uptrend is simply the last sell candle before the buy candle that broke the structure. All right, so right here is the last swing, and I'm looking out for the last sell candle. All right, this is my last sell candle. It's a bit wide, but then just for the purpose of education, let me just show you this. Okay, so you just do and draw that out, right? This is a point where I'm expecting price to come back and pick up orders. Okay, this is a zone where I'm expecting the market movers or the market makers to come back and gather up orders before pushing the price upwards again. Now, take note that you mark out an order block is not a 100% guarantee that price must come back to that point. Okay, because there are so many institutional reference points. Order block is just one of them. Okay, like I said earlier, we have order blocks, we have mitigation blocks, we have breaker blocks, and so on and so forth. All right, at this point, please give this video a thumbs up and subscribe to this channel. Also drop your comment, your observation, or any questions you may have in the comment section, and I'll be sure to get right to it. So like I said, there are other institutional reference point. Order block is just one of them. Now, price may continue moving upwards. It may not come back to your order block, but it may come back to your mitigation block. It may come back to your liquidity void. It may come back to your fair value gap, and so on and so forth. All right. But order block is one very good way to mark out your zones that you expect price to come back to. Okay, it doesn't mean that if it goes to another zone, maybe a mitigation block, that you wouldn't take your trade. This is just to make sure that you are aware of what the market is actually doing. Now, understand something, that you are going to see different breakup structures and different order blocks on different time frames. Okay, now somebody else, another trader may look at this, right? Apart from this very obvious one here, the trader may also come here and mark out this structure. All right, because they are on a 15 minutes time frame, they can mark out this structure. They can also come here and mark out this structure here. So it is very obvious, right? It is very simple. Just mark out the obvious point where you see that price has actually broken structure. All right, this is the structure. That impulsive move that it gives to continue the trend. That's what we mean by break of structure, right? So there are points where you see that market broke the structure. Market broke structure here, market broke structure here, market broke structure here, and so on and so forth. Market also broke structure somewhere here. Okay, so they are not really difficult to identify. Now, after market broke structure, it didn't just, what it usually does is to leave an order block behind. I want to be looking out for where price left the last sell candle before the buy candle that broke the structure. It depends on how you have set yours. Mine is purple and black. Some people leave theirs at red and green. All right, it depends, but you know which one of them is a sell candle and you know which one of them is a buy candle. So basically, in an uptrend where you're looking for a demand zone, just look for the last sell candle before the buy candle that actually made the impulsive move to break that structure. I'll take that again. Look for the sell candle, the last sell candle before the buy candle that actually made the impulsive move to break that structure. All right, which is what I will basically be marking. Right here, I'm also looking at the sell candle. I don't know if this is right here. I'm also looking for the sell candle, right, before the buy movement. Okay, so once you get that, you just mark that out and stretch it into the future. All right, you are expecting price to come back to those areas. Now you are going to be seeing a lot of small zones right here. Don't be fooled, just look for the extreme one. All right, don't be confused, just look for the extreme one where the movement actually started. All right, where the movement actually, for instance, you can see all here, all these things are what we call liquidity. I'll make another video about liquidity and drop it right here. But what you should pay attention to is where the movement actually started. All right, this may seem like you can mark here, but basically what I would see all here, all this area, as they are just liquidity. I think this is a trend line liquidity right here, but this video is not about liquidity. All right, this video is not about that, but just know this, right? Just know this. We want to be looking for obvious points where the market actually broke structure, right? So market broke structure right here and left an order block, right? which is essentially a sell candle before the impulsive buy movement that broke the last swing. The last swing is here, all right? So the last obvious swing, this is where the last obvious swing is. Obviously, you can see it, right? So, and then this was the last sell candle before that move that rallied up to break this last swing. I hope it makes sense. Okay, so that is basically it. Again, you will see that price went, and then came back, because I'm expecting price, like I said, you would see this on your chart, scattered everywhere on your chart, but it is not a must that 100% of the time that price is going to come back to your order block, because again, there are other institutional reference points that price can also respect, not just your order block. Okay, so but order block is one very good way of marking out your demand zones that price is most likely to come back to. So in this case, price actually went back to this same zone. So imagine that we were still somewhere, here, right, where I marked this zone, and I marked this zone, and I stretched it out into the future. Now price has come back. This would have been a very good opportunity for me to just put my long position tool here, and then just took that buy. All right, give space for your stop loss just in case of a liquidity sweep, and then this would have been a clear 1 to 2, or I think it's almost 1 to 3 risk to reward. All right, so you can see that the fact that I'm supposed to be buying in an uptrend doesn't mean I will just be buying anywhere. I want to look out for those institutional reference points. What I mean by institutional reference points, these are zones where the market movers and the market makers usually gather up orders before they eventually move the price upwards or push it downwards. Okay, so you can see that again. Now this is another zone. This is another zone right here. So somebody can also come here and mark this zone. All right, and mark this same place where I took my buy from. Somebody can also come here and take that last sell candle before the buy candle that broke structure and mark it out into the future. Okay, you can see that price also came back again to pick. It was a sniper entry though. Price actually came back to pick that zone again and continue rallying up. All right, so somebody else who would see this, or who would have seen this, would have also taken a long position here. Okay, and also made good money from this. Somewhere here, I think it's a 13 pips stop loss, but you can also extend it in case of liquidity sweep, just like I said. But that would have still given you, maybe your exit would have been somewhere here. All right, you would have still gotten a decent 1 to 2 or 1 to 3 risk to reward. All right, and if you want to push your luck further, you can just stretch it down to this point. You would have gotten a decent 1 to 3 or 1 to 4. All right, so that is basically it. Again, like I said, it is not a must that if you mark out an order block, that price must come back to that point. Now personally, when I want to mark out my demand or supply zones, I like to do it from I like to look at what the market is doing from the higher time frame before I then scale down to maybe the 15 minutes and take my entries from there. All right, so the only way you can be sure to understand this is when you go over, like I keep saying, you go over to your charts and practice. You go over to your chart and practice. Okay, so that is basically it. You go back to your chart and you practice. Okay, this is another zone right here. This is another zone where the market actually broke structure, and you can see that price came back. This zone is even a big zone, a big sell candle before an impulsive move over there. You can see that price came into it, right? It came into that zone, and then before rallying up. Somebody who had caught this would have gotten a decent, let me see the risk to reward. let's just, the last high, I'm targeting this high, so that would have been my exit. Okay, that would have been my exit point somewhere here. Okay, so that would have given a decent one. So that's basically it. You look out for the last sell candle before the buy candle that broke structure. All right, the last sell candle before the buy candle that broke the structure to the upside. Now let's assume that I come into the chart, and what price is doing is that price is actually pushing downwards, or the market is selling. What I want to be looking out for is to sell, right? Then I'm not just expected to sell anywhere. All right, I'm not just expected to sell anywhere. I should be looking at institutional reference points that orders are being gathered, and from there follow the market movers and the market makers. Again, like I keep saying, it is not wise for you to be counter trading in this, especially if you are a complete newbie. You shouldn't be found buying where the market is selling or selling when the market is buying. Let's find another pair that we can find an obvious downtrend, and look out for the other blocks that are there and see how price react to those zones. So you can find this on different charts, whether you trade stocks, whether you trade forex, whether you trade cryptocurrencies, whether you trade, you would find this. All you have to do is to go over to your charts and study them. Each pair or each instrument has a way it behaves, and all you have to do is just study it, basically, right? All you have to do is study it and know exactly how it behaves. Right now I'm on BTC USD. So let's look out for the same thing, right? In a downtrend, let's take it from here, from this top here. So in a downtrend, I want to be looking out for positions where I would get, remember in our example, I said, assume I have a sales and marketing skill that I want to offer and make money from it. I want to be selling it to an economy, or at a point where I know that I'm going to receive more money for the same set of skills, right? Imagine I'm a remote worker. I would want to be offering my skill to an environment or a zone or an economy where I'm going to make most money out of the exact same skill. All right, I want to be making money from that same skill. I wouldn't take that skill to a place where I'm not going to be making enough money from it. All right, so the same thing here. You want to be selling at a point where you're going to make the most money. All right, it doesn't mean you cannot sell down here. All right, it doesn't mean you cannot sell down here, but it's just that you wouldn't be making enough money as you'll be making that, and you can actually make losses from there. Okay, so now let's pay attention to this. I want to be marking in a downtrend. I want to be marking out the last buy candle before the sell candle that led to the break of structure. So it's just an opposite of what we did when we were looking out for other blocks in an uptrend. Okay, so that's what I want to be looking out for, the last buy candle before the sell candle that broke structure. Okay, so join me as I look for it. Let me expand my screen a bit. So now you can see right here. So I can see that market has broken this structure right here. All right, it's not a fake out. Price actually broke this structure with an impulsive move. So I want to just be looking out for the last buy candle. Now on my chart, the color purple is what I used for my buy candle, right? Yours may be green. I know most people have theirs as green. Some people have theirs as green and red. So it depends on what you already have on your charts as your buy candle and your sell candle. So in this case, my buy candle is the purple and my sell candle is the black. So I just want to basically mark out this purple candle, the last buy candle before the impulsive sell movement. All right, that's what I want to be marking out. All right, like I said earlier, the fact that you marked out an order block doesn't necessarily mean that price must come back to that 100% of the time. No. Okay, there are other institutional reference points. So right here, I'm also looking at this price also broke this structure and let's assume I mark out this zone and I stretch it out into the future. Okay, you can see how price, let me take all this off. Okay, so let's assume that this was where I was, where I marked out this structure and marked the zone out and also stretched it out. So you can see that price left this particular place with an impulsive move. Okay, and then it later came back to fill up that zone and then continued selling. Remember, it is a downtrend. I want to be selling. I do not want to be buying. I want to be selling, right? Take note, this is like, this from here to here is like a change of character, right? So more about change of character in another video. So you can see how price came back. Now, as price has already broken this structure right here, all right, some people are still going to mark out this place. Price came here, right? So if I had come here to mark out my short position tool, I would put my last swing here or here. Okay, so but let's keep it at that. Let's leave it here. Let's assume this was where I marked, left room for my stop loss, giving my stop loss room to breathe. So this is what I would have gotten, right? This is what I would have gotten. Okay, so price came here and actually continued rallying down. Okay, so that is it. So let me take this off and let us assume that I missed this and I come back to the market and I see that price has taken that zone. Okay, let's say price has taken that zone and I missed it. There's no need chasing price because there are so many opportunities that the market will give you to make money from. So if there's any position that you have missed, there's no need FOMOing or chasing the market. Just allow it. It's going to present another opportunity for you to buy or sell depending on where the market is moving. Okay, so let us assume that I missed this trade. I was not online or I didn't place my order before the market came here to. I can simply look at what price is doing right now. Price has broken another structure right here. Price has broken another structure right here. So I want to ask myself, what was the last this is actually the last sell candle, but it has been mitigated here. So I'm just going to be marking out the entire zone. Some people would mark only, let me make that bold. So some people would mark only this zone, only this buy candle before the impulsive sell candle. Okay, because they will argue that price has already mitigated this very candle that, I don't know if this is being bold enough. So this very candle right here, let me find something to. So some people would argue that this very candle right here has already been mitigated by this small buy candle here. So some people are going to mark out this small one, because at the end of the day, these things are very subjective. You may learn just the principle, but how you trade may differ from another trader who learned exactly the same thing you learned, or how you trade, right? This, you may be trading the same strategy, but what you see may be totally different from what another trader sees, which is why they say trading is very subjective. It depends on the trader. Okay, some people would mark out this small buy candle. Some people will go ahead and mark out this other big candle that actually they want to be safe. It's better safe than sorry. Okay, so yeah, some people may decide to do it that way, but let's just assume that I mark out the entire buy candle before that impulsive move. Okay, and let's just watch what price will do. Again, like I said, it is not a must that price is going to come to. You are not the owner of the market. Price may decide to use another institutional reference point and then give those people who trade those people who trade from those institutional reference points to also have an opportunity or also have a shot at making profit from the market. Okay, So, but just understand the concept. If price is falling down, make sure you look out for the obvious swings. Now ask yourself, where exactly was the last um buy order before the impulsive sell that broke the structure? Okay, so price would have, some people would have come here to mark out this. Okay, some would also mark out here, but I feel like here is a liquidity zone, so I'm not going to be marking out down. Another video will talk about liquidity zones and how to spot them and how not to mistake them for the actual point where price is going to move from. Okay, so you just keep marking as price is moving, you just keep marking. If there's any point where you come into the market and price has already taken off, now there's one we missed. Let me pause that. You can see that price, after I marked out this zone, this was the, let me take that away. So after marking this zone right here, remember, after you spot your break of structure, the next thing you should do is to look for the last buy candle in a sell market. You look for the last buy candle before the impulsive sell that broke your structure, right? So in this case, I marked out this break of structure. Okay, and I'm basically looking out for the last buy candle. So I'm just going, including this indecision candle, I'm just going to be marking out the entire thing, right? Because after all, it doesn't hurt. Okay, sometimes if you over refine your zone, market may come there, but it may not tap you in. That's another issue about refinement of zone. All right, what I mean by refinement of zone, when you mark out a zone from a large time frame and then you keep scaling it down to a smaller time frame, it has its own advantages and disadvantages. Okay, so but basically you can see that price came back here. Price came back to this zone that we marked and then kept on selling. So when you mark out, let me take that again. So basically, right, what you do is when you spot a break of structure, you mark that break of structure out. Use your tools, mark out your break of structure, and then go ahead to find in a sell market, go ahead to find the last buy candle before the impulsive sell that broke your structure. Okay, and then you can put when I'm trying to sell, so I'm going to be looking out for a selling opportunity. I'm going to put it right here. Okay, so maybe I'll just, depending on what your risk to reward is, you can come here and mark out your short position. Okay, like I said, price will not always come back to the zones that you have marked. Okay, which is why you also have to understand other institutional reference points so that you don't miss out on anyone or on any opportunity that the market presents for you. Okay, so now I have marked this out, and all I have to do is just to put out my sell position, my short position, and then when I see what price is doing, when I see the potential that this trade can give to me, I can then move over to my execution, to maybe my MT4 or MT5 or any other trading application that you use. And of course, it's very clear here, so you can spot exactly where you want price to take off from, where markets can take off from, because you're not like I said, you're not the owner of the market. The market is a boss on its own and it does whatever it wants to do. All we have to do is just follow it and make the most out of the opportunity that the market presents to us. Now, after you have marked, like I said, after you have marked out your break of structure, you mark out your supply zone. In this case, your supply zone, because price is selling, you want to be marking out your supply zones. Go over to your trading tool, your execution tool, and then set your orders. Okay, so let's see what price will do here. Price comes, and then it sells from that zone. All right, so that is it. Let me make this a bit faster. So that's basically how to do it, right? I think price even came back to retest this zone 2 times, giving you double opportunity to enter into the market. Okay, so that is it. It is not difficult. All you have to do is practice. Like I said, you will not get it right by watching a video 100 times, or by watching different video on supply and demand, or by watching thousands of videos about other blogs or any other institutional reference. But you have to go over to your chart and practice these things. This is the only way you can say for sure that you have understood the concept. That's when you can now apply it to your trading, right? And then make sure that you execute. It's not by watching a lot of videos. You can watch 100 videos and still not get anything if you don't go over to your chart and practice those things. So I believe that this concept has been understood. Um, if you have any questions, drop them in the comment section. Please give this video a thumbs up, subscribe to my YouTube channel. And if you want to learn other concepts about Forex trading, you can check out this next video, and I'll see you next time. Bye-bye.